The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. We've had a market here today with a little bit of country and a little bit of rock and roll. And depending on when you tuned in, you would have been happy or sad. We're off 5 points in the S&P cash now at 2163. And what we do have is volume, folks. We've been really trying for about 5 or 6 days to get back to some kind of statistically significant volumes, and we have not as we've continued to push highs. Once again, we went to 2173 on the cash today in the S&P. What we do have for the first time is volume coming down, and I can tell you that one of the reasons that we were putting on short positions over the last few days in at least the daily newsletter is something I say very often. We'll bring that up shortly. It's known as a tease. In the meantime, what do we like to do? We like to get together every day about this time.
The following takes place between 2 p.m. and 3 p.m.
Well, the dollar index is off 17 cents. I figured it'd probably kind of pull back a little bit into the 96 area. 97.13 as we speak, and 2163 on the S&P cash. 2.15 billion shares, which is, about 250, maybe 300 million shares more than we had at the start of the last two shows. So volume is getting better. We are going lower. You might be able to correlate the two. Maybe not. But I suspect that we're pulling back at least to 2120 on the S&P cash. And depending if we have this kind of character where we go up, everybody tries to rally, kind of pulls back, doesn't have a lot of juice, but we try to rally again and we pull back a little further, is kind of the definition of the frog boiling highs, and these are the most dangerous of the bunch. The reason why is by the time that the people that are stuck in at the top realize that there wasn't some big Roman candle, there wasn't a 4th of July picnic with fireworks, there wasn't a marching band coming down the street saying, this is the top, you get a lot of people holding. And, of course, they've been trained over the last 3 or 4 years that anytime the fire looks like it's going to come out, Mr. Fed has come by with a big gallon jug, basically a Molotov cocktail, gasoline in a bottle, and they throw it on the fire yet again. Question is now, where do you go to hide your cash? I don't have it on the list, but I posted it in the den this morning, and that was the first comment, at least in the UK, that I saw about banks warning about zero interest rates and lower, and saying if you wanted to leave your cash here in an account, we're going to start charging you for it. It wasn't like we're doing it now. It's just that it's going to happen. So just get ready for it. I don't want to hear you whining about it, Mr. Customer. But zero interest rates look like they're probably coming to the UK, which means that I think, what else can you say? Well, let's get started here on today's show with a little bit of histoire.
And it's all just a little bit of history repeating.
It is history repeating. This day in 1881, Thomas Edison files a U.S. patent for a Festmile telegraph, or for those in Lutz, a fax machine. It was actually first commercialized by AT&T and Western Union in the 1920s, really only used in the news service to send documents and weather. Very little use until you could actually dial somebody directly without having a operator involved. It really caught on about 70 years later when that did happen, and switching systems went to transistor-controlled devices. And in the 60s, really kind of started to really catch up. And of course, by the time it really got to its zenith, computers and emailing people pretty much put the death knell on faxes, still used for legal reasons, but that is about it. And of course, it was 70 years down the line. As many things that were attributed to Mr. Edison were patented, he didn't have anything to do with it. He did work on the light bulb. Almost everything else he did after that was stolen or worked for other people that he appropriated, but never let facts stand in the way of a great story. At least that's what we're told. Dog fooding. Had a question, and I can't even remember when I said it, but you get on, if you just try to talk for an hour and then remember what you said after even a couple of days later. But apparently I was talking about dog fooding in something I've said, or an email or a letter. I don't remember where it was at, but I know that occasionally I dip into tech speak. And they had this question, so in case anybody else had it, one of the things that they call in Silicon Valley is something called dog fooding. And I used it without probably putting a link somewhere, or just said it and didn't think about it. But it is eating your own dog food. It came from Silicon Valley in the 80s, mid-80s, when Microsoft started using Word and PowerPoint and all the other stuff that they came up for their office suites and Excel. And there was an edict that came out from Bill Gates that said we need to be like Lauren Green. Lauren Green had a bunch of Alpo dog food ads where he said, I don't only represent Alpo, I feed it to my dogs. And dog fooding has stuck in the tech world since then, and it is a commonly used phrase, especially when people can, even people like at Google, you'll see occasionally they'll make a big deal about one of the CEOs having an iPhone. And you would think that they would be smart enough not to do that. But occasionally these guys are so oblivious to what's going on that they didn't read the dog fooding story and know that they should be using Android devices. And who knows? Of course, he was a bookworm, the guy that had it at Google, the CFO. And I think he's been pushed out now anyway. Excommunicated. Oh, we got, we're now. I'm going to get into Facebook, which comes out after the bell. And maybe talk about twits a bit. Siri, you better buy the Netflix for Apple. We'll talk about a few things before we get moving on to charts in the bottom half of the hour. Welcome back, Andy, too.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're getting close to testing the low of the day on the S&P cash. This is extremely bearish action, as I said, and it won't probably seem like that to many people. A lot of times, everybody thinks that the biggest moves are always the most bearish, and sometimes they are, but many times they just extinguish. They're a selling or a buying climax. Everybody expects everything to come on, and normally it's the small steps that add up to bigger steps later on, not the big steps where everything just gets tossed out. Everybody always, in the big moves, everybody's wanting to buy the next dip. When everything just starts to melt slowly, no one knows where to buy that dip, and that's when those markets pull back a little bit more slowly, but at the same time, a lot more dangerous to many people, because by the time they wake up, they are the proverbial frog that has boiled. 2163 on the S&P cash. We're only off 5, but volume continues to be strong. After the bell tonight, we've got Apple, and tomorrow Facebook, and the not Twitter. I don't think Twitter's tomorrow night. But just some random thoughts out here. I also had a comment from one of our learned subscribers. We were talking about Netflix being bought by Apple. I didn't think it was a possibility, and there's a variety of reasons why. Most of them are that in the video business, most of your content deals will not go with you. That is not the same kind of thing as in Siri. Apple has had an incredible tough time signing up enough people to get Apple TV running. But of course, the worst part is many of the people backing away from them from certain labels so that they don't have all the music. To me, Siri would be a much cheaper buy It would make the current CEO act like he's doing something, which I think is more important than actually doing something. After a bunch of failures with new products that have failed to grab hold, and of course, a stock price that is languishing below the $100 mark, as we said, we'd play this song anytime we talked about Apple, and it was under $100. Yes, all out of love for Apple for the most part. It's just bouncing around in this $90 range. I don't know what earnings are going to be. My guess is the thing could just be flat. I don't think there's a lot to push it higher or lower. But, they want to get into this music business for some reason that is beyond me, since no one has made a dime doing it. I see somebody coming home in a brand new car and buying an airplane, a boat, and moving to a much bigger home. I kind of want to know what business he's in. When I want to see people like Pandora struggling to stay in business, everybody losing in that business, my first thought isn't, how can I get into that business? Which is very strange for Apple. I think Apple thinks that it can still make a big business out of music. As far as I can tell, they've done nothing but throw money down a rat hole. And generally, people that aren't smart enough to figure that out of the first or second time will probably go after it a third. Siri is up way beyond any kind of value it actually intrinsically has. There aren't a lot of people buying those little boxes to listen to music anymore. Everything is streaming. But what they do have are some of those nice contracts with other music labels that Apple would still like to get. Now, on Netflix, as I said, in video, many times, we don't and can't see the contracts, they won't show them to us. But I will tell you from being in the video business for a number of years and dealing with everybody on the backside, signing lots of non-disclosure agreements on anything that I had to see, that I might see that was in production at the time. Almost all these things do not transfer out. That is, if Netflix sold itself to Apple, is there any guarantee what they would get and what they couldn't? And almost all of those are on a non-disclosure to begin with, which means that they could not, without permission from the people they got it, talk to Apple about it. So as far as I could tell, Apple buying Netflix would be them buying a pig in a poke. They would have no idea what they're getting. Siri, probably a much more transparent thing, and maybe not as prevalent to see that music contractual rights don't transfer on. This is you may go back into the way back machine when everybody was pumping this crapola for BlackBerry, and we dug into it and found out here on the show, the Power Trading Hour, that, of course, almost all the rights to almost everything in the patent portfolio for BlackBerry, if they went bankrupt, would be the only way to get them back. And that is probably the same thing with Netflix. And that is they would physically have to go bankrupt before the people that they had got their rights back. But the other thing that could get them those rights back and terminate the existing contracts is a sale. My guess is that Hollywood is incredibly paranoid about Apple getting into their business and running it like they have the music business. I don't think a lot of people can really believe me, but they, decimate normally means 1 out of 10. It's just the opposite. There's only 10% of the business that's left after Apple has basically savaged the music business. And everybody in Hollywood, I will tell you from reading Variety and other things, are incredibly paranoid about getting Apple getting up in their biz, as they would like to say, in their grill, if I'm going to get down with the homeboys here. Yeah, everybody knows I'm cool like that. Anyway, that's one part of it. Facebook, I call them fake book now, and the Twitter, always constantly now getting their hands caught in the cookie jar, trying to manipulate news. This is nothing new. But somebody actually posted another article today about satisfaction with these coming down. I'm not saying that Facebook will miss, but I will say that Twitter is kind of toxic. Facebook, this may be the last decent earnings call for a while, and I went into reasons why. But if I was thinking of shorting the fake book, it would be after, not before, this earnings call. But any of these things, especially, they have ebbs and troughs. But everything kind of looks to me like social media has kind of gotten to the point now where it's kind of old hat. Kids move on. They are fickle. But I will call this the unreality. Just a lot of things don't make sense to me. I could be wrong. I don't have any bets on these, but that would be my call from the big seat behind the golden TFNN microphone today. We will be back after this short timeout.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And the Chinese giant Li Echo, who I've never heard of before, is buying Vizio, the television company, for $2 billion. After the bell tonight, we have Akamai, Anadarko, Apple, Boston Properties, Buffalo Wild Wings, Illumina, the DNA company, iRobot, the company that will be our overlords in the near future. Juniper Networks, Panera Bread, which was down today, and United States Steel. And I got it. I'll be able to use it tomorrow, but I will always look for it today. And that is United States Steel.
Michael, we're bigger than U.S. Steel.
Oh, yes, we are. Oh, isn't that a great part of The Godfather? Just got to play that every time I get a chance. It is a mad market. We're going to go to the charts very quickly. We've got a lot of stocks out here kind of moving out here, but one that caught my eye here just lately was Linear Technologies. Let's take a look at that. LLTC, it's got a buyout offer and it's up 29-30% here in the last few minutes, I think. I didn't get a chance to look at it, but a huge move, as you can see. Now, that's a candle. I always wanted to say to some people, I said, oh, it's a big candle. And I always think of the Crocodile Dundee movie where he pulls out his knife and he goes, now this is a knife. That's, anyway. Linear Technology buyout order or offer. Don't know if there's a whole lot of news into that. We've got a lot of other stocks. Won't spend any time on it. A little pharmaceutical company blew up and is off almost 80%. That's TKAI. Another pharma company getting bad news off 43% is Cardinome Pharma. That's CRME. We'll get to the stocks that actually are not just a feast or famine, but this one is a little bit of famine out here, and that's Seadrill Partners. We've been talking about these guys for a while. Took a big hit today off almost 29% on the last tick. This is down to the gap up of 419. As we said last week, I thought that there were several sectors that were incredibly weak. Energy, finance, and what did I say? Energy, finance, and biotech. We'll get to the biotech part in a little bit. But down, huge volume. You got everything you want. These energy companies need crude to stay higher. It's not, and especially when crude gets below pretty much $50, just offshore stuff becomes way too expensive. Everybody thinks that all this fracking oil is fairly expensive, but nothing's more expensive than shipping things. Once it touches water, anybody that's owned a boat knows that everything is at least double or triple. And Seadrill Partners down on heavy volume. Noodles and Company, another one having another one of these IPOs that was coming out on the back of CMG, thinking that it would do a lot. It's busted through its big times lows. We were rather dubious about this one when it came out. I guess we're justified now. Got to a low of $8.12 today. It is blowing through its lows. It's blowing through them with significant volume. And I don't think there's anything else to say. A lot of those IPOs, especially part of last year, didn't do so well. Mr. Reddy's duplicate drugs, what would you call it? It's like, what do they call them? Not duplicate, but generic? That's what it is. Nice little pop down here on Dr. Reddy's. It's going for its low. That'd be $40.68 from the January 21st low. You had a higher volume low that didn't test the previous low on May 6th at 41.60, but I think you got a pretty good idea of what's going on in this. But if I remember right, they are a big maker of drugs. I didn't see the headline on it, but I think the chart says it all. Mass Therapeutics, it's a penny stock. It's off 15%. The one that probably caught my eye the biggest this morning was Mobileye, MBLY. The reason why is that they said that their contract is not being renewed for working for intelligent cars with Tesla. and that hit, what is it off? It's off 9%. It was off down to about $40 pre-market at some levels, even during the market down to 42. You didn't see a lot in this. Actually, the energy up to this high had been pretty good. The last few days have been kind of sideways. Here is your sign of weakness, though. A lot of very big men that are very, very sharp are short Mobileye, and one of those companies that I don't want to go long more than a few days on because of it. The books are extremely dubious when you talk to some of the bigger people like Citron, Andrew Left, and Jim Chanos from Chanos and Associates. And you got everything. Nice size candle, huge volume to the downside into this gap that goes up on the 29th. It had 3.3 million shares. And of course, we're into 20 million shares. As always, whether on the top or the bottom, huge volume normally moves or signifies at least temporarily a selling climax. You may get 2 or 3 days out here going sideways on this thing. But everybody wanted to be in this because everybody had to be in driving cars. And a lot of people are going to be trapped like rats. What else do we have out here? We were saying that we thought that Gilead, we were saying that we thought that the IBB looked extremely topped out. You did have some high volumes going into previous highs, going into these earnings, which could have scared you a bit. The energy down from the June 7th high to the June 27th low was about 18% stronger on the downside than the pop to the upside. All you had were a lot of people that got run out of their short positions before the bad news today. This is headed back down to 77.92, which is that June 27th low. But you had a couple of them. Celgene was the other one. I don't know how it didn't have a real chance to chase that one down today. It got bad news after the bell last night. Not near the problem, but certainly down. I suspect that we're going to see that 240 area again on the IBB, and that may be where the long-term lows finally come in. You got to like this action. What you don't like, or what I don't like, is this energy off this low of the June 27th low. It got to 240. $240.30, 3 million shares. It came in about 500,000 shares lower than the February 9th low, but never pierced it, which is one problem. But that energy up off this low has always made me think this thing is kind of suspect. It's off probably a good high 20s, maybe 30% on the way back up, and it's not something you want to see when these things are already in trouble. But my guess is you're going to have another chance at 240 on the IBB. We'll be back after this. Give me an email at path@tfnn.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we were talking about the IBB. You've got, about 2 million shares back into this last highs that went into the gap down that occurred, on June 6th, or the day after June 6th, actually. And what did they come in with? About 2 million shares. So you're back up in it. I don't think that this is anything that signals the end of the biotech sector, but I do think that you get one more bite at the apple down there at 240. This is a nice consolidation zone. I figure that this comes back into around September. Maybe we've got a little bit more clarity what's going to happen in the election and how these stocks are going to be treated. Some people like them. Some people think that they're the devil. I kind of like to know that there's a cure for some of the things that may ail me someday and have ailed me in the past. Anyway, what you don't like is this light energy up off this June 27th low. I don't think there's a whole lot more you can say about it than that. We're off a 1.5 points in the S&P cash. Volume has died pretty much in the last 15 minutes, 2.36 billion shares. So we had a lot of volume coming in, and it's now gone to the quiet time. And my guess is that the volume, when it comes in, will be the last 30 or 40 minutes of the day yet again. Anything more than about 3.5 billion shares on the New York Consolidated Tape would be a pretty good signal out here that there's something going on. And, of course, Fed meeting today, announcement at 2, earnings out after the bell. It will move a little stuff. And then, of course, EIA numbers tomorrow, API numbers tonight on energy. But energy kind of looks like it's going to get down there under 40, doesn't it, on crude? Kind of thinking it will. What other stocks do we have that are moving out here today? Let's take a look at some others. Panera after the bell already off 5%. I don't know if something leaked already. I haven't had a chance to check much out. I've been tending to my own knitting, as they say. What do we have? There we go. Come on. PNRA, right? That's it. Okay. Didn't have a chance to check out the headlines of the news, but down on big volume. Did it leak early or anything? Let's take a look at headlines and see. I just noticed it was down. There were a bunch of restaurant downgrades. Oh, that's what it was. I did see that earlier this morning. A lot of people saying it's the end of Panera some people, shills out there saying and trying to push Panera today. And I had to go back and look at it real quick because it was one of the weakest faint praises of a restaurant I've heard in a while. But before I could even get to it and think about it, the other person in the debate already jumped on the guy and said, well, okay. But kind of interesting. You know, this is about the fourth or fifth time in the last 2 weeks I've heard about restaurant problems and volumes. I know a guy down outside of Dallas in the software business, and he says that even though he lives in very nice neighborhood with, you know, $500,000 houses, that some of the bigger chains are going out of business around them, maybe because of the loans to those oil businesses. He said a lot of people were involved in the petroleum business around them in those high-dollar homes. But I don't know what you can say. Certainly you got decent volume. In fact, you may have the best volume going back to this blow-off high of 318 where you had 1.5 million shares. What do we got so far? 1 million shares. So I think you could have 1.5 million shares on the downside with Panera, but certainly some downside. Another one is, and you have to start wondering about these, USG, maker of the drywall, has had a fairly weak chart. You've seen it banging against this $29.58 high from April 21st. Had 6.4 million shares, instantly came off that and was sold. Got into it on May 27th with 1 million shares, lasted all of about 10 minutes, back into the trading range. This one tried to push higher and higher, got to 2.6 million shares, and of course has come right back into the trading range. They built this back up a little bit. Numbers were good on housing, but there is a point where, as one famous movie title said, it's as good as it gets. And to me, that is probably what we have. It's about as good as it gets for USG at about $30. It's hard to put a price above that on it. McDonald's, another one in the restaurant sector out here today that is problematic. Sales, not what everybody thought to say. There were a lot of quips and snarkiness about McDonald's missing earnings, but you know, you had some real big volume back here from this February 8th low to the May 10th high. You pulled back. Energy was lower, but not all that exciting. Tried to make an ABC. It's failed here. You know, it's a dividend stock for the most part, I guess. People won't care. On the winning side, Exact Sciences up 28% today. EXAS. We talked about linear technology. It's up 28% on a buyout offer. After the bell last night, Texas Instruments had one of the better reports out here, up 9% today. Gap with volume. What's probably more interesting than anything else is what Texas Instruments makes. It makes a lot of chips that in the industry they call glue chips, GLUE. And it means that you take high-dollar chips and you need to interface them with maybe a processor or memory, or there's a lot of other stuff. Anyway, Texas Instrument doesn't make that many very expensive chips. It makes a lot of inexpensive chips that have been around for a while. Think of them kind of as a generic manufacturer of pills. There's still a lot of money in it, and that they got a big pop out here suggests that there is now business going on besides iPhones and other smartphones, that maybe the computer business is back a bit. A lot of their chips are used on that for buffer chips and other things. But nice bounce. One of the few true breakouts. This isn't an iffy thing. It popped out with volume and energy. I've been saying that probably the semis and technology is not the first thing that you want to short as a broad sector out here. And a fairly nice move. Wynn Resorts also doing well, WNN. The Chinese have left off a little bit of the bad news that they were inflicting on these hotels. Up, but not a lot of volume today. Not a lot of believers. It's not a bad day, but you would have liked to see a lot more volume in this pop up here. And it's, I'm going to say sedate, WYNN for those. Give me a call, 877-927-6648.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And that's right. In the next segment at the top of the hour, we've got Tom O'Brien. It is Tuesday. So we will have Andy Heck, I think in that 3 o'clock hour, is at the 4 o'clock hour. He's been gone for 2 weeks. He's been married. Well, he was before. He got remarried. No, not remarried. He's been married. Oh, boy. He's in the 4 o'clock hour, right? Oh, I know he's on at 5, but he's on at 5 all the time. But he's on with Tom at 4, right? Or 3. Anyway, he'll be on in one of the next 2 hours. And, of course, always on in his show in the 5 ones. But Andy is fresh-faced. He's told me that he's fully rested and not exhausted at all from his honeymoon bliss. and he's ready to go out and eat some bear or eat some bull, whatever he's got to do to get the job done. Anyway, we were looking at some other ones out here. But what can you say? Las Vegas Sands bounced again. This is telling me the same story that the other one told me, and that is this gap down on 21.1 million shares on the 21st of April. That's Las Vegas Sands, up on 7.6 million shares today. So you can see that these are kind of making some great signals out here. I know everybody's all pumped for these. Man, were they whipping them hard today on financial infotainment TV. You got to own these, got to own these. The Kramer was all over these.
Bring me the head of the false prophet, Jim Cramer.
Oh, I had to get that into today. But it is everything that you want it to be. I just don't see the volume or the energy comparative to the gap down. And, you know, if this thing goes sideways for a little bit, I could see it. On a bigger note, with the last 2 minutes of this show going on, we'll skip some charts and go to my long-term predictions. Some of the things that I look at that say that the economy has topped and that we are more likely than not headed to a recession are starting to show up. There are a few, most of the people know about the general ones out here. That crude is moving back down is probably not a good sign. But there is one other signal that is the most correlated signal in front of a recession. And most people will not think of it, even if I gave them all the time in the world. There are records going back to early 1905 and against the stock market. And it is the demand and or availability of high-priced legal talent for white-collar criminals and people that are not so white-collared criminals, i.e. Murdering spouses. But these, let's call them high-priced guns for hire, legal guns for hire. And there is a thing that's been bouncing around for years. Some people have actually done some studies on it. But one of the best is whether or not there is super high demand for attorneys, for civil and criminal, on the very high end of the market, these guys that charge $500 or $1,000 an hour to be represented. And guess what? In fact, many of them, they had some kind of convention last week. All of them said that business has never been so good as it has in the last 2 months. And that correlates about as good as you can for the last 115 years to the beginning of a recession. We will see you tomorrow. Same bat channel, same bat time. Remember to sell when you can, not when you have to. Hang on for Andy and Tom in the next 3 hours.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.